Hello traders, welcome to FX Beethoven Forex Argo Decoded. My name is JD. Today guys, I want to teach you how you can make a good entry on weekly candle if you are capable of holding your trade for a whole week. Then this video is gonna be for you if you're that type of trader. If you are a scalper or day trader, I will show you guys in the next video how to work on that. So now, however, whatever trader you are, whoever you are, you need to know this strategy. You need to understand how to approach this because it will help you a lot when you are positioning yourself during your time of trading. So now, the example I'm going to show you here is for bearish candle, weekly candle, a weekly bearish candle. And before we proceed, I have to tell you that it must be this weekly candle must be in momentum. It must be a momentum candle. It must be a momentum candle. That's rule number one. I mean, what I mean by that, I mean there is a moment you open the chart and you see market is trending on a weekly time frame, and then you expect that a new coming candle, a new weekly candle that's going to form will also be trending in the same direction. So use this opportunity to take this type of candles. So now this is a complete weekly candle. However, here we have daily time frame. This daily time frame shows us what happens when this candle is forming. So and then we'll talk about 1 hour time frame later as a confirmation. So when you see in your chart, you see market is trending, it is in a strong momentum. That is an opportunity for you to make money as long as you trade in that direction, as long as you follow the momentum. Now, what you have to do, you have to wait for, you have to trade only Tuesday or Wednesday. But most of the time, on a Tuesday, you have to trade on Tuesday. So, on Monday, this candle, this bullish candle, the white candle is bullish, the red candle is bearish. So this Monday, this is Monday. Monday will create a range. As you know, usually create a range. Now, what you have to do is to wait. Wait for Monday to close. After Monday has closed, what you do, you mark the high. You mark the high of it, and then you wait for Tuesday candle to start. This means you are going to trade on Tuesday or Wednesday. Then you wait for Tuesday candle to start. So once this candle starts, you have to understand that it will start, if it is going to manipulate the high, it will start as a bullish candle. That's rule number one. So you have to remember that. So if I have to redraw this candle as a bullish candle, it would be like this on Monday. I mean on Tuesday. It would be like this, and it would be a bullish candle. It would be like this. It would be a bullish candle. Be a bullish candle. Then, as it is rejecting the top, manipulating this Monday. So, as it is rejecting, you are going to see this on a 1 hour time frame. You are going to see this pattern on a 1 hour time frame. I will talk about that. So assume that price is here, or assume that price is here, the candle is still bullish. However, it has traded on a certain key level, on what? On the daily time frame. On the daily time frame. A key level on the daily time frame, not weekly. Remember, on weekly we are seeing one candle. We are in strong momentum. We have a key level on the daily time frame. It is trading on a key level on a daily time frame. When it is in this zone, when the price is here, when this candle is around here, when it is rejecting, you immediately have to switch to 1 hour time frame. Switch to 1 hour time frame. Okay, free. Switch to 1 hour time frame. Don't use your 4 hour. Switch to 1 hour time frame. We will talk about 1 hour. We will talk about the 4 hour time frame in next video. This time use 4 hour. This time use the 1 hour time frame. So you are going to trade the weekly candle. Then you are using daily time frame to identify manipulation. Then you are going to use 1 hour time frame to make entries or to confirm direction. It's up to you. If maybe you may realize that you may realize that 1 hour time frame will give you a big stop loss, and you decide to choose to wait till you make till you enter as a scalper, if you like that. So now, as this candle is bullish and is rejecting the top, it has hit the key level, then is rejecting, going down. You have to be on a 1 hour time frame. You have to be on a 1 hour time frame and watch as this manipulation forms. As it forms, right? You get it. Now, once they start, of course, it will be going down like this. You on 1 hour, if you see this candle engulfing, if you see a bearish candle, a 1 hour bearish candle engulfing a bullish candle, and 1 hour candle has closed, let me type it. Bearish engulfing has closed, please open your trade. Please open a trade. If this candle on a daily is rejecting, coming back down after taking this high and after hitting the key level, and on 1 hour you have seen engulfing candle has closed below the body, not the wick, the body of the bullish candle. Let me draw for you. Like this. It has closed here. It has closed below the body of this bullish candle. Please open your trade. For example, it may be like this. And see, it didn't close below the wick, but it has closed below the body. Please open your trade. Okay? Hope you understand. This is an entry model. An easiest entry model. So bearish engulfing has closed below the open. Let me add this. Has closed below. See, it has closed below the open of a bullish candle, of last bullish candle. below the open of last bullish candle. Please open your trade. Please open your trade. Please open your trade. So you will be doing that when this candle will be rejecting after taking the high and hitting the key level. Okay, this is the easiest way to catch the top. After making entry here, your stop loss should be above the high. Above the high. And another thing, do not do what? Do not move your stop loss. Keep it, because it is another candle that is like going to come back to test this newly formed other block. Remember, this is a block, another block formation, or some call it a sponsored candle. This is another block being formed around here. So another candle may come to test it. Another candle may come to test it. Another bullish candle may come to test it to the extreme, maybe. It may even come back to test it. To test the rejection block. Can you see that? Only 1 hour. So if you have moved your stop loss here, you will be taken out. And then the chart will still go your way. So once you see something like this, you have to expect that another candle will continue to go down. Or there may be multiple candles testing, but your stop loss must be above that. At the end, price will drop, and this candle was bullish, will return bearish. Return bearish. Return bearish. This candle will turn bearish like this, right? So if you're hesitant about this, then you can position yourself to trade the next daily candle, which is Wednesday. And this is what we'll be discussing in the next video. Then what happens when you are going to deal with daily candle formation? This is for weekly candle formation. Weekly candle formation, use the time frame for identifying this manipulation and the key level, and then use the 1 hour time frame to confirm your trade. Hope you understand that. So for making entry or working on 4 hour, which may even, for working on a daily time frame, which may even use here for sharper entry, this is reserved for next video. Okay, guys, I will use an example, but depending on what? Depending on the position of your key level, momentum, and news calendar, sometimes Monday may create the high of the week. May create the high of week instead of Tuesday. For example, in some cases, Monday will create the high of the week. For example, it has hit already key level, then Tuesday becomes a continuation setup instead of a manipulation day. So you understand. If you don't see this pattern, don't panic, because there are so many models around that. There is so many models around that. There are some profiles, weekly profiles, forms in different ways. Hope you understand that. So now that you have got to understand that, let me give you an example of how it looks like. Now let's go to weekly time frame. Let's use, for example, this candle that has a strong wick to the upside. That means there is some kind of manipulation that was formed. If you see a candle like this that has small wick, probably Monday has created the high of the week. So you have to understand that. Now, we place a vertical line in this candle. Then we are going to look for a trade setup on this candle, this weekly candle. So from here up to here, there is a weekly candle. There is a weekly candle around here. So we are going to look for this candle so that you can see how it was formed. Now, let's go to from weekly to daily to look for manipulation. Now you can see here you have got what? We have got Monday trading higher as, and it create a range for you to do what? To prepare yourself for a trade. And then you have what? You have a bullish order block on this level as your key level. Remember, we must see this happening inside a key level. Inside a key level. As you can see, this is a key level. Now, hope you can see that, and I have to delete it. You have seen you have a key level here. Now what do? You mark the high of Monday. That means you are not going to trade on Monday. You do not have to trade on Monday. After marking the high, remember the next step, I repeat one more time, the next step is to do what? Is to switch to 1 hour time frame. Switch to 1 hour time frame. Switch to 1 hour time frame. Now, after switching to 1 hour time frame, what do? You are looking for, we are going to see, you will do this when the price is trading here. When the price is here, this week, when the price is trading above this candle, above Monday, right? You know you are bearish on a higher time frame. The momentum is high on a higher time frame. So you are going to switch to 1 hour time frame. You are going to switch to 1 hour time frame as your market maker time frame. Then you look for what? You wait. If you see engulfing forming and you see price is returning back below the high of Monday, you have to know that it's time. It's time. So for me, once I see this, even if I do not hold trade for a whole week, I apply it on a daily time frame, on the daily candles. So once you look at here, my God, let me show something. Let me go back a bit to daily, because I have to also show you the open price. So we are going to mark the open price of what? Of Tuesday. So I'll bring another vertical line and I will change color, make it blue green, to show that this is the beginning of daily candle, Tuesday candle. So I will go to 1 hour one more time. 1 hour. Then you can see yourself. You can see it yourself. Price is trading higher to manipulate this high. At the same time, they are looking for what? Order pairing. What is order pairing? When price is going higher, when they are buying to sell, these buy positions, they have to find buy stop on this level where they will offload this buying position. That's why they go to also offload their position on this area. We discussed this in chapter 6 of 2025 mentorship. So they are going to offload their position here. This is what we call order pairing. Now, after that, you see this last bullish candle that was formed here, and you see another bearish candle engulfing it. So this is the wick, the whole wick, the candlestick wick. You get it? So this is a manipulation of Tuesday. This is the order pairing. Now what happens? Engulfing candle forms. You see it and wait. You see it and wait. So once this candle closes like this, closes below the open price of the bullish candle, which is here, and you wait for it to close. Once it happens, open your position. You have caught the high of weekly candle. You have caught the high of weekly candle. So enter when the candle closes and stop loss above. This is 17 pips of stop loss, which is not bad on 1 hour time frame. Okay, hope you see that. You can also wait for a displacement if you want, like this one. This break was also, and you wait for market to come back to trade to this imbalance that was formed here, and then price goes down. However, this time you are likely to face a high or a bigger stop loss. So you have to understand that. So if you follow displacement, we'll do something like this. Almost 40 pips of stop loss. However, I recommend you to follow this entry model and go to the chart and back test it. So how do you back test? If you're going to back test, do not do chart replay. No. What you do, go and find many weekly candles, bullish and bearish. This applies to the same. I'm giving you examples on bearish candle, but now you can even test it on a bullish candle. On a bullish candle, you will see a bullish candle engulfing a last bearish candle, and then you will open a buy. However, when you are testing, look for candles where Tuesday manipulated Monday, because you are going to find candles where Monday is the high of the day. Ignore that as of now. As of now, ignore that. I want you to backtest this strategy I'm showing you on this video, in this video, for Monday. I mean for weeks where you have Monday as the high of the day. Ignore them as of now. Don't mix stuffs, right? I love students who listen. So go to the chart. If you find a weekly candle where you see what? Where you see Tuesday where you see Tuesday manipulated Monday. Go back, go to 1 hour, and you will see this pattern forming. You will see this pattern forming. Get me? Remember manipulation, and try to look left and see if you can see other pairing. If you can see other pairing. If you think this video is good, if you loved it, please hit the like, subscribe to the channel. Also remember to check in the video description. There is a link to our Telegram channel. You can follow us. Hope you get it. Hope you understand it. Do not forget it. And remember, there is always a friend of yours who needs to understand this. Please share the video to him or her. You will be blessing them. Thank you very much. Until next time, good luck and good trading.